Good morning, everybody. Hey, welcome to Friday. It is July 14th. Hope you all had a great week. Yesterday, we had some good news yesterday. The markets did well, closed pretty high. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there are so many things that you and we just can't control. However, you can take some control of your portfolio and the amount of risk you have in that portfolio. That's the key thing. You need to know how much risk you currently have, and you need to understand how much risk you should have based on your risk tolerance, based on how close you are to retirement. Those are important things you need to understand so that you don't get beat up in a bear market right before retirement. Give us a call, 863-382-0037. To schedule your core retirement analysis. And with that, we got Dave coming up next.
Light FM in Whitney, Houston is there. God, I loved her voice. It's 8:42 here, 19 now before 9. Time to check in and see what Wall Street's doing. Earnings season begins today. It's almost like Christmas because we got all kinds of numbers to talk about. And that means we're going downtown to Statler Financial Services' very own Phillip Statler, who's on the line this morning. Phillip, how you doing today?
Hey, good morning, Dave. It is the end of the second full week of the third quarter. And I got to say, it's been a really good week as far as the markets are concerned.
Absolutely. I mean, yesterday was another up day, and it was not, for at least the blue chip indexes, as monstrously exciting an up day as gives you reason to have bubble fears. Dow was up by 48. Standard & Poor's was up by 38. Words cannot describe how thrilled I am when they give the mouse flatulence on me in the middle of a sentence like that. That was a test, people, by the way. You still there, Phillip?
I'm here. I wonder what happened to you.
Yeah, we had an emergency alert test that interrupted everything, and we had mouse flatulence going over the air for a couple of seconds. Gotcha. Anyway, we were up by like 14 hundredths of a percent on the Dow, up 85 hundredths of a percent on the S&P. NASDAQ had a bit of a party. They were up over 1.5%, 219 points up. The VIX went up a little bit to 13.67, which still is no great shakes. And what I was reading is it sounds like what was driving up the NASDAQ exchange was all the excitement over artificial intelligence. Google made a big announcement yesterday. Their artificial intelligence engine they call the Bard, it can even change voices now. You can have a guy instead of a girl telling you what the average length of a mouse's toenails are or something like that. That evidently was really exciting in the artificial intelligence community. Are you thrilled as well?
It doesn't raise to that level, in my opinion.
I'm not exactly getting goosebumps off of it, but I mean, all of the indexes now at our year-to-date highs, they're all at a bigger high that we haven't seen since the first half of 2022. So we obviously have some relatively good news. There's always flies in the ointment, and a fly in the ointment is going to be the Federal Reserve. In about 2 weeks, they're going to decide whether or not to hit us on the kneecaps with another interest rate increase. One more indication that inflation is a little bit more under control than it was import prices this morning. They were expected to go down by 0.1%, went down by 0.2% last month. All of this tends to total up to the big picture number that you and I have been talking about, that inflation's a little higher than it should be, but we've now done enough to be able to start the trend downward to manageable levels, and I'm kind of hoping the Federal Reserve is listening.
Yeah, me too. I mean, we are definitely heading in the right direction. I mean, U.S. import price, that's the 5th decline in the past 6 months. So, and that kind of, goes along with some of the other economic numbers we've seen and how they've been heading in that direction. So I'm hoping they're paying attention, but I wouldn't hold my breath, Dave.
I'm not really holding my breath either. Something you and I have been preachifying for a long time, that an interest rate hike really doesn't get into the full pipeline of the economy for 6, maybe 9 months after you do it. Well, now we're about 3/4 of the way through that spate of interest rate increases we did last year, and we're starting to see the effect of them. It's real easy to turn the volume up too high, and the Federal Reserve has a bad track record at doing that over the years. So a little bit of reserve wouldn't be a bad idea at the moment, at least to this old economist's outlook.
No, it really wouldn't, David. And I think next Tuesday might be a little interesting too, because that's when we get the retail sales numbers. And, I don't have any forecast yet as to what the economists expect it to be. But if that starts to tail off, then, I got to think that they should pay attention to that.
They probably also need to look at it, except Amazon. Remember, we had Prime Day, and Amazon says they set a new record for a 2-day Prime Day celebration this week. So let's not get too excited by a bump up in retail sales next time, because, we all spent money like drunken sailors on Amazon this week, didn't we?
Well, thankfully, that's going to be July's number, Dave, and not June's number.
Oh, that's right. It's a monthly number. Okay, fine. Go to town. Burn that plastic. It's earnings season. I alluded to at the outset, and we're starting to get some of the big household names in. They start out with the big financials each time, and I'm kind of starting to draw a picture here off of what we're seeing so far. But we're getting good news out of virtually all of them. J.P. Morgan just absolutely cleaned the clock on the expectations, didn't they?
They did. Morgan came in in pretty good shape. They beat by 37 cents a share at $4.37. And revenue came in quite a bit more than expected too. I'm gonna say by probably $2.5 billion more than expected. So good news for them, and they're trading up this morning almost 3% before we get going. Then you had Wells Fargo reported. Same for them. They beat as well. They were expected to come in like at $1.16. They came in at $1.25. Not quite as good as of an increase as the JP Morgan saw. Revenue was slightly above expectations, but still Wells Fargo is benefiting, up 3.6% this morning. The last actual bank I have is Citibank reported. They beat as well. Again, slightly on both fronts, but they're trading up this morning 1.5. Then we have BlackRock reported as well. Now they're not really a bank, but they're a financial. I call them a financial institution, lack of a better term, and they had a good quarter as well. They were expected to only make $8.45 a share. They actually made $9.28 a share. Now revenue was basically in line as expected. And because of that kind of as expected revenue, they're actually taking a fall this morning, down a little over 1%.
Well, somebody had to play to a hard room. I'm looking at most of the banks. I'm looking at them, and compared to prior year figures, the absolute numbers are down, which is kind of drawing the picture that we're looking for. But they're beating expectations almost across the board. And that seems to be a harbinger of good things for the earnings season to come. We had one non-financial report, though, and how's our health insurance business doing?
Hey, they United Healthcare reported they did pretty well as also. They came in at $6.14 a share versus the $5.99 that was expected. Revenue was about $2 billion more than expected, so good for them. They're up 2.75% this morning.
Oh, I won't say I'm happy to see a big-time health insurer making gobs of money, but I'm glad they beat the street, all right?
Exactly, because it helps the stock price. Now, hey, earlier this week, Dave, we talked about Disney and some of the issues that they've had because of their political stand and because of their raising prices. Well, I found this article quite interesting. Like I said, it's an article, somebody wrote it. Don't know how true it could be, but there is indications that maybe Costco is not going to restock Bud Light anymore. I found that kind of interesting in this article. But more importantly, I think, is the actual numbers, right? Bud Light, the week before was down 27.5% in sales. This week, it was down 28.5% in sales. Along with their other brands are all taking a hit as well. As much as Budweiser's down 10% over the week before. Even Michelob Ultra is down 4.5%. So, companies maybe need to wake up and smell the roses and figure out that politics is not going to sell goods.
Absolutely. There was a rant that I went on earlier this week that, if you're doing business, the people who disagree with what you think, their money is just as green. It's better shut the heck up and do business as to what you do for a living instead of taking political stances when you're in the business world. Go vote the way you want to. I mean, I'm perfectly happy with anybody's political views, but taking a stand costs you almost any time, even if 80% of the country agrees with you. The 20%'s got the 20% has green money too.
That's right. And here's what I'm waiting to see. And I haven't seen any indications of this yet, but the board of directors in those companies, they have a fiduciary responsibility to the shareholder. And I'm surprised we've not seen shareholder lawsuits over some of this stuff because what these companies have done is hurt the stock price, and that's not gonna make the investors happy.
If I were an InBev shareholder right now, I'd be a little less than happy with what's been going on with their marquee brand on this side of the pond, wouldn't you?
Absolutely would be.
Resetting the table, it was a modest to a darn good up day yesterday, depending upon whether you're talking about growth stocks or blue chips, but it was all green. 45 minutes before we opened this morning, starting out with some relatively good banking news. How are we doing on the futures so far?
Well, I'm gonna say the Dow, because those banks are all members of the Dow Industrial 30. They're getting the biggest push this morning, up a little over 0.5%. That's $182. The other two indexes are so-so. The S&P 500 is up 20.2%, which is $9. And the NASDAQ 100 is up less than 0.1%. The Russell 2000 is actually going the other direction, is actually down about 0.1%. So, we've got kind of a mixed bag altogether. On the other side, though, we've got silver made another huge jump, Dave, up 0.75% today, and it's past $25. It's back up at $25.13 an ounce right now. Remember, it was down to 22 not too long ago. Gold is basically flat right now, and crude oil, though higher than where it was yesterday substantially, is down 0.1%. It's at $76.81 a barrel.
Only in the 75 range yesterday.
We're getting too close to 80.
I think so. Overseas markets kind of reflect us. Japan was the only Asian rim market that was off, and it was off by less than 0.1%. The rest of the markets up fractionally at 6 a.m. when they closed up this morning. European markets are looking at our reports so far, and they're all evenly up in the 0.5% range midway through their trading day. We like what we're hearing so far on earnings season, but it's real early. If you've got a lot of equity action in your retirement fund, you really need to know where your risk is. How do I find you to figure out where my retirement is risky?
David, that's exactly why we created the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement analysis, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning to fill you in on the weekend and what's likely to affect your money next week at this time. Phillip, thank you so much. You have a marvelous weekend.
All right, you have a great weekend, and I'll see you Monday and not tomorrow.
Did I say tomorrow? I meant Monday.
Yeah, you did.
I knew it was weekend. I need more coffee. Be well, my friend. I'll see you then.
All right, bye.
It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I hope your week was good. Hope you have a great weekend. Please join us again Monday. And if we can help in any way, don't hesitate. Give us a call, 863-382-0037. Bye until Monday.